Per usual, everything that's channels for educational purposes only and is not intended as financial advice. It's Macro Monday. What a whirlwind few hours it's been here on the crypto side of things. Starting with the flows report from James at CoinShares. We had mild inflows last week. Based on today's price action for BTC, we may have 500 million easily just for BTC alone, bouncing from around 94K at open to the current price of around 102. Great bounce. We'll take a look at the cloud in a second. That's what we want to see. Most of this, of course, coming in through IBIT. And one thing a few people have noticed on the Fidelity side, it does seem like somebody is using the Fidelity BTC ETF for a momentum algorithm. So, for example, today, if we see a massive inflow for Fidelity, that would make sense. And they're going to have bigger outflows on outflow days as well, if that algo is running. Just something to keep in mind. The IBIT ETF flows are also T+1, so we won't see today's flows for IBIT until tomorrow, but we will see Friday's flows for IBIT today. And then on the asset mix here, most of this coming in via BTC and Ethereum, really not getting much of anything. ETH looks to be in some trouble here on the price chart. I wanted to talk about the CME basis as well today because that has come way down. Generally, you can think of this as a sentiment indicator as well. So if we're at 102 and the basis is pretty mild relatively, we're back to the basis last seen before the breakout. That probably means we've normalized this area a little bit. If the basis gets too wide, you've got arbors coming in and selling this down on the future side. So all in all, we're looking good here on the TradFi front. Before I go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro at the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PVI DBA Kraken. And on the BTC chart last night, we were talking about it. I said, well, if we wake up and we are not in the daily cloud, that is a win. So we're back in the range that we've been in since November, probably above the middle of the range. And all we have to do is just exist up here. We don't have to do anything crazy. There's clearly a bidder coming in to save us. And if last weekend wasn't convincing enough that weekend price action is a bit iffy at times, this weekend certainly proves that. Just because when it's the only market that's open and people are fearful, that's what they sell. So you had, of course, all these TradFi commentators saying, oh man, ETH is down 50% in a day or whatever it was, and BTC's down X% in so many hours. That's correct. No other market was open. I mean, what are people supposed to do, right? Like if you wanted to sell, you could have sold, and you can do that at any day, time of the year, anywhere in the world. That's a feature, not a bug, but that does bring more volatility. We also had a resolution of the Mexican tariffs, at least for a month. Markets seem to like that. But from a technical perspective, to be back above Kijun, back above the cloud, this is a huge candle, big volume on Kraken today. That's what you like to see. It's just back to we're so over, it's so back, whatever, right? Very hard to directionally trade this until we're out of this range. But we've lived to die another day, at least on the BTC. Now for alts, that story isn't as nice. ETH still looks a little wrecked here. For me, it's just not a buy unless it's above the daily cloud, and you can flip through any number of these charts and see the same thing. Yes, is buying the bottom of the wick preferable in any occasion? Sure. But that doesn't mean you're going to have additional follow through necessarily here on trend. That's what the cloud is for. Sol also looks okay. It's lukewarm. It's just tough because it's been so volatile, and now it's back into the middle of the range. I don't think it's a resounding buy on the cloud. Link back in the cloud. So nothing across the board looks as good as BTC. Even Ripple, huge bounce there on Ripple. This will get a bearish TK cross today or tomorrow. And it's probably going to take 30 to 60 days for most of this stuff to recover. From a trend reset perspective, massive volume on SUI today on Kraken. Biggest volume day on record. The candles look great. All the candles across the board for the day look great. That's not the problem. The issue going forward is establishing and continuing the trend that was intact. So it's good to see the washout. It's good to see the recovery. Now the next steps are maintaining neutrality at best here for most of these coins. If we close as a dragonfly today on SUI, for instance, what you want to continue to see, not screaming highs, not even a V bottom, although I'm sure that'll be welcomed, just flat price action where the level is maintained. So for most of these alts, it's going to take some time. Trump sub 20 down there reached 15. So BTC certainly looks like it's holding the lion's share of the bidders here, likely because that's coming in via ETFs, via exogenous institutional and or retail capital that's outside of the crypto ecosystem. I thought I'd pull up total 2 BTC as well. And again, this is not in the bullish territory, right? We had a brief period of bullishness at the end of 2024. That was short-lived, and it's now just more of the same. Probably worth a revisit in Q2, but to think that any altcoin buy here is on balance going to massively outperform BTC doesn't really make too much sense here to me until the trend on this flips bullish. We're not there yet. I also noticed today, this is the Kraken USDT USD price in the white there, and the Tether circulating supply in the purple. Prices above $1 are a premium, below a discount. And we tend to see stablecoin prints when the USDT price is well above $1. So what this means is there's demand for Tether. And if there's demand for Tether, usually Tether is printed, and that means more money in the ecosystem. It kind of goes both ways. It can be demand for flight to safety, and it can be demand for other reasons to deploy in the ecosystem. So it's not exactly one-to-one, one thing or the other thing. But if we continue to see Tether prints, that is very good for alts in the ecosystem broadly. Calendar this week in the US, bunch of Fed speak, some employment, but the big number is going to be the unemployment rate at the end of the week. We need this Goldilocks situation where it's not too low, it's not too high. If it's extremely high, then we have recession worries. If it's extremely low, then maybe the labor market's too tight. So a 4.1 number would be fine for the unemployment rate and shouldn't cause too many problems if that is the case. We had some announcements today of Trump signing an EO for not a strategic Bitcoin reserve, but for a sovereign wealth fund. Perhaps that is a better place for Bitcoin to sit. It would be more actively managed and traded, probably. It's not going to sit in a vault for 20 years, but maybe more palatable to get passed from a legislative perspective, if that's even necessary. I don't know if the wealth fund is involved in the TikTok sale or will be involved in the TikTok sale, but I think that's the general idea. I'm not too sure on that, but one way this could go is, okay, TikTok is banned unless you sell it to the strategic wealth fund for $1. Then the strategic wealth fund sells TikTok to somebody in the US for X billion dollars, and then the wealth fund can go out and deploy that capital. One way they might do it, I have no idea. Looking at the Fed rate probabilities, unlikely to get any changes in the next meeting here until June. Inflation data, unemployment data can shift this around, but based on expectations for unemployment, I wouldn't expect this to move too much for next month, regardless of how much complaining Trump does. We did have quite a sizable step down in trueflation over the past week. This could be immigration deportation related relative to rents and housing, but that is certainly headed in the right direction and is very welcomed, getting closer to the Fed's target of 2%. We're also seeing 3 days in here now, but a CPI slightly less than February, core coming down, PCE coming down. So all of this is headed in the right direction so far. I don't think that's to be argued. What's potentially ahead of us is if the tariffs do go into effect anywhere in the world, in the EU, in the UK, China, Canada, how will that then affect inflation potentially? But so far so good on the numbers we can see. GDP also shooting up here to 3.9% on early estimates. So we're certainly not in inflation territory. Nobody's saying the I word. On the liquidity front, I did notice the reverse repo continuing to drop. This is down to 97.7. This represents an inert pile of capital that just sits there collecting yield. And if this runs out, then we may have issues in the piping of liquidity in the ecosystem. And then the Fed may have to act. They may have to switch, for instance, from QT to QE. But that probably will only happen once this drains to zero. If we start to see more bank failures, if we start to see issues with liquidity, then the Fed would certainly step in. But they're unlikely to do anything until this drains to zero. So we're getting there on that front. Overnight, the dollar had a massive spike higher on the tariff news over the weekend. That got smacked down quite a bit. Best thing for crypto is DXY as low as it can go. It's amazing BTC is still at 102, considering the journey DXY took from 100 to 108. If we do see a purposeful devaluation of the dollar, that will be very bullish BTC, very bullish gold, but there's likely to be some pain in front of that if any of these tariffs do get enacted. Looking at the 10-2 yield curve, still positive. We, of course, have to be careful of this. Historically, a de-inversion of the yield curve is a precursor to a recession. The timing's a little bit loose, but it has a 100% hit rate. So you can't really rule this out. But again, so far so good. GDP looks good. Unemployment looks good. Inflation's coming down. That's what you want to see. The unemployment rate down there at 4.1. Nothing too concerning. Even on the ancillary employment numbers, I don't personally see anything that's very alarming. Initial claims, continuing claims, things like that. So far so good on that front. In the bond complex ETF arena, just not knowing what any of this stuff is, looking at the cloud on a 3-day, none of this stuff looks great here. TLT, IEF, SHY, AG, varying degrees of neutral to bearish still. And the cloud would certainly like these much higher than they are now to reinitiate a buy signal. The good news is, like I'll talk about NVIDIA in a second, the good news is most of these have flipped bearish enough, especially TLT, that any future signal with price above cloud should be an actionable signal. And this is what you want to see. You don't want to see wishy-washy. You don't want to see something like the SHY where it's neutral, it's a mix of signals. This certainly needs more time. But something like TLT above 93, and it's probably go time if that happens sometime this year. But from a trend perspective, you're sort of just guessing. If you're buying down here, you may be right, you may be wrong, but it is in bearish territory. So you got to be careful with that one. A bond ETF that probably looks a little bit better than the previous four is TIP, TIP, inflation protected bonds. Also not a resounding buy signal, but it's getting there. It has the fractal of any chart you'd want, just a huge down leg and then sideways for 2 years, right? This has established a base and looks better than anything here. You know, this stuff is trying, you know, it's been trying to base for a couple of years, but the base on TIP looks a little bit more firm to me. And then on to gold. Gold has done exactly what you want any cloud signal to do. Even dating back to May, June, July 2024, you get a push higher, a loss of momentum, bearish TK cross, you're out. Bullish TK recross, you're back in. Then you get another move. Bearish TK cross, you're out. Bullish TK recross. For being honest, a few times here, we got the crisscross. So it's not always perfect, but it's always doing its best to try to keep you in the right side of the trend in the event that the trend leads to continuation. So gold looks excellent up here. Hit a new all-time high today. Very bullish on trend. SPY, it's a little bit of a different story, right? We had this push on gold at the beginning of the year, early January on the TK cross, and we had continuation shortly thereafter. With SPY, it's not bearish. It's not exactly bullish. It's in bullish territory, but it's this middling thing where the signal hasn't reset like it did in September. And the head and shoulders pattern previously never really broke down. It's just a mess, right? It's just a huge random walk range. So to me, I don't see anything here on the daily. The cloud also is a bit confused. Technically, it's a key June bounce. TK lines touching. You know, it's not the picture of health that you'd want from a bull trend. It's not officially bearish. It's just momentumless. There's really nothing to speak of here. Ultimately, what you want to see is a move above 610. It's just a question of, do you want to risk it here with a stop loss at the cloud, or do you just wait to see stronger continuation? Equal weighted S&P, RSP, maybe has the better non-signal because it is in the cloud, it's waiting on trend, but it's probably something to keep an eye on this year. If the SPY continues to just chop around, if NVIDIA keeps chopping around, if most of the Mag 7 keep chopping around, then maybe we do see some broadening out. Maybe we do see some strength in the RSP, and maybe we do see a go signal here on the cloud, but it's not there yet. At least I don't see anything super actionable there. QQQ, more of the same, a little more bearish than the SPY. It has closed inside of the cloud, reopened outside of the cloud. It's a giant mess here. Really not much of anything going on. I'd imagine you'd want to wait until this is back above 530. But the best signals are always going to be this bullish TK recross reset, like May, like September. Here you're just kind of guessing. So not really much going on with the SPY. I thought I'd pull up XLK today. This is the tech ETF. And you can see the footprint of NVIDIA in this chart. And this is certainly more bearish than the SPY and the Qs. And there's just nothing to do here. It's in the cloud. It's neutral. No trend. So if you like trends, that's not for you. XLU, also similar, kind of bouncing around in the cloud. It had that volatility off the DeepSeek stuff last week. It's fully bearish here. So again, a signal to keep in mind, because when the train is boarding like it did in March 2024, little pit stop there in August with the TK recross, those are the entries that I look for. Whether or not they go anywhere or not, like December 23, right? December 23, it really didn't do much of anything. And that may occur again here in February. But if we can flip these signals bullish once again, then I think that's a decent setup there in XLU. SMH is a mess, has been a mess for quite some time. Very volatile, very much just an ugly chart, just very ugly. It's hard to want to trade this for me because, again, it's not trending. You had a shot at a breakout and that got stamped down. It's in the cloud. It's just all over the place. At this point, you probably want to see like a multi-week move above 250. I don't even know what it would take for this chart to turn around. But I just think your money, my money certainly is better anywhere else. NVIDIA, fully below the cloud here, opened today below the cloud. Much like November 2023, this is what you want, right? So let this be bearish, let it reset, let it do nothing for a couple months, and then I think there's a time to revisit it, maybe in Q2. But it's really gone nowhere since mid last year. And I think people sort of get stuck, certainly in crypto, where they maybe have had some success or mild success trading this in 23 or 24, and then they're just wanting to force trades on something like this over and over again. And I just think there's better opportunities to do nothing or to do something anywhere else. This chart just, to me, looks like it needs time. Apple, more of the same. Honestly, it's fully reset here in the cloud. Really nothing to speak of there on trend. Microsoft on a 3-day here. Zooming out, it's gone nowhere since late 2023. It's tried to break down as a head and shoulders a few times. This just isn't something I'd want to play around with until it's back above 450. You're just risking opportunity cost of sitting in this thing, bouncing around, going nowhere for a long time. Meta, a much cleaner trend here. A series of bullish TK crisscrosses last year. One of the stronger of the Mag 7. Absolutely. Very near all-time highs there at 700. Netflix continues to look great. Sitting at all-time highs. Flag there at 1,000. Amazon is my winner of the Mag 7 for the year. I think this chart looks great. Sitting there very near all-time highs. Actually has a setup and a measure move to much higher versus some of these others which don't have much of anything. They've already hit their targets. So if I had to pick, do I like NVIDIA or Meta here, Netflix here, right? These just look better. These look like better charts that are ready to go. And they have the momentum. Google is another one. I don't know if there's a trade or setup here necessarily. Maybe this is a little cup and handle action, but also very near all-time highs. Looks good. There's an old mega cup and handle target from 2023 up there at 213 plus. And that just looks like a better trade than NVIDIA or Apple to me. Tesla also getting a little sun-setting formation here. Probably gets a bearish TK cross within the next week, I'd imagine. And that's telling you anything from September, as far as a long is concerned, would be a jumping out point on trend. Maybe you get a falling wedge situation here, but trend-wise, it's certainly getting a little tired. I thought I'd throw in KWeb too. KWeb back at that 32 level. a monster of a mess here, a multi-year, just nothing, multi-year chop. You, of course, have to be sensitive of tariff headlines. Maybe you get a mini inverted head and shoulders here, but this has gone nowhere since 2022. I don't think you can be super confident that this has bottomed just yet, but it's trying, right? It's trying to maintain just flat for multiple years. And if for any reason China gets a positive headline, then I'd expect the Chinese stocks to start to do better. On the crypto equity side, MSTR below the cloud, not exactly in bullish territory here on the 4-hour, chopping around. It needs more time, but days like today certainly help MSTR. It probably needs all of February at this point to fire off a bullish signal again, and just looks like chop, right? There's really nothing to speak of here on trend, and it probably just eats away at the options buyers for another month. Doesn't look particularly inspired at the moment. Coin all over the place. I really don't see anything here either. Non-trending, neutral, really nothing going on there. Square, they changed their ticker to XYZ. Zooming way out, this still looks fine to me. No issues. Just got to be patient. As long as it's above a high time frame cloud, as long as it's above 80, I think you're fine. Is it going to move quickly? Probably not, but looks better than most charts here at 91. And then lastly, the miners. This is the 4-hour, and they're just so volatile. I think if you're trading these, you really have to babysit, or you go on the other side of the spectrum and you just say, you know what, eventually they're going to do fine. But in the moment, just all over the place, right? Volatility off the charts. And what I would rather prefer to wait for if I'm trading something like this is some sort of multi-month pattern where you can be reasonably sure that pattern plus cloud, you get a move off of that. Here, there's really not much of anything, right? You know, maybe this eventually morphs into an inverted head and shoulders that breaks out in like March, April timeframe. But at the moment, there's not much going on. So I think you have to be very choosy with what you do and what you trade here. And alts certainly look not happy with the volatility. Alts just maybe on the back burner in the near term until liquidity picks up, QE comes back online, and this tariff stuff cools down significantly. That's all I got for this one. Like, dislike, comment, share, subscribe, and happy trading.